Welcome to this explainer. If you follow the semiconductor space, you know things move at lightning speed. But every once in a while, a company makes a move that genuinely changes the game. And that's exactly what Lattice Semiconductor has just done. We're diving into some breaking news today that is quite literally reshaping the AI infrastructure landscape.
$1.65 billion. That is the massive price tag on Lattice's blockbuster acquisition of firmware leader AMI. And get this, it was announced right alongside an absolutely historic first-quarter earnings beat. We're talking about a major strategic inflection point here, one that combines hardware and software to capitalize on this massive multi-year AI boom.
Section 1, the FPGA market battlefield.
To really get why this matters, we have to look at the battlefield. It's your classic David versus Goliath scenario. On one side, you've got a giant like AMD, who used their huge acquisition of Xilinx to dominate the high-capacity adaptive SoC market. On the other side, you have Lattice. Instead of fighting AMD head-on in that massive chip arena, Lattice won a different route. They carved out an incredibly profitable moat specializing in low-power, small and mid-range FPGAs, which are basically perfect for industrial automation, security, and edge computing.
But hey, Lattice isn't content just staying in the shadows of the tech giants. Not at all. Their latest Q1 2026 earnings report proves they are rapidly scaling up to completely dominate their specific high-growth niche. They're capitalizing on new opportunities across AI servers and advanced robotics in a really big way.
Which brings us to Section 2, Lattice's record-breaking quarter.
Let's look at the actual numbers here. Total revenue absolutely rocketed 42.2% year-over-year to hit $170.9 million. This wasn't just some lucky bump either. It was driven largely by a record-breaking performance in their compute and communication segment, which jumped an unbelievable 86% year-over-year. The engine behind this? Just insatiable demand for data center AI applications.
But honestly, even more impressive than that top-line revenue growth is the incredible operating leverage in their financial model. Non-GAAP earnings per share surged an astonishing 86% year-over-year. Like the CEO pointed out, they're consistently driving earnings growth that significantly outpaces revenue growth. And really, that's exactly what you want to see as a company scales.
So here's the crucial point. With non-GAAP gross margins reaching a very robust 70%, up from 69% the previous year, Lattice is demonstrating immense product differentiation and pricing power. I mean, when customers view your chips as mission-critical rather than just commodities, you get those 70% margins. And remember, this is all before even factoring in their newest software-centric acquisition. Moving right along to Section 3, the $1.65 billion AMI acquisition.
So, Lattice is acquiring AMI for $1.65 billion. The deal is structured with $1 billion in cash and $650 million in equity, which is about 5.4 million shares. But the most vital detail for anyone tracking their financials is that Lattice expects this deal to be immediately accretive to gross margin, free cash flow, and non-GAAP EPS. They aren't relying on complex cost-cutting synergies to make the math work here. AMI's business model is inherently high margin and highly complementary right out of the gate. Now, you might be wondering, why AMI? Well, AMI is a 40-year industry leader in platform firmware and BMC infrastructure. Now, a BMC, or baseboard management controller, is an embedded microcontroller used to monitor and manage servers. By scooping up AMI, Lattice secures the absolutely crucial software layer needed to orchestrate and secure the highly complex hardware running modern AI-driven data centers.
As Lattice CEO Ford Tamer put it, bringing AMI's firmware into Lattice's hardware ecosystem reduces integration risks and basically speeds up deployment for clients building advanced AI servers. Think about it. Customers don't want to piece together mismatched hardware and software anymore. They want a unified, secure management platform to get their AI infrastructure up and running faster. Section 4. Doubling the AI market. So, what does this all mean for the bottom line? Management is projecting that this single acquisition will effectively double Lattice's serviceable available market, or SAM. They're moving from a $6 billion target market today to roughly $12 billion over the next 3 to 4 years. The bulk of this massive expansion comes directly from that compute and communications sector, specifically targeting those complex AI data centers. This strategic leap fits perfectly into what management calls their everywhere companionship strategy. I absolutely love this concept. Instead of trying to directly compete with heavyweights like NVIDIA or AMD for the main processing units, Lattice is positioning itself to broadly support them. Their low-power FPGAs, combined with AMI's silicon-agnostic firmware, will handle the secure boot, power sequencing, and platform management for basically everyone.
And you know what? The numbers completely back this up. Servers now generate 38% of Lattice's total revenue, which is up significantly over the last few years. Plus, AI customers alone are expected to account for a quarter of all 2026 sales. Ultimately, this AMI deal is projected to push Lattice's combined annual revenue run rate past the $1 billion milestone by the end of this year.
Finally, Section 5, the market verdict.
On one hand, Wall Street is overwhelmingly bullish on the long-term vision. I mean, out of 12 analysts tracked by S&P Global, there are 8 strong buys and 4 buys. There's not a single hold or sell among them. They're giving the stock an average price target of $145. That represents over a 21% upside, which signals deep, deep confidence in this multi-year AI infrastructure play.
However, we do need a quick valuation reality check. From a strict present-day perspective, Lattice is, well, it's expensive. They're trading at a steep 13.91 times forward price-to-sales ratio. That is literally more than double AMD's multiple of 5.41. Because of this really high valuation and the challenging macroeconomic environment, more cautious models, like the Zacks rating system, have actually flagged Lattice as an overvalued sell, preferring the relative safety and scale of a giant like AMD.
So, here's where we stand. Anyone looking at Lattice right now is basically forced to weigh 2 competing realities. On the one hand, you have the undeniable short-term execution risks of integrating a massive $1.65 billion firmware company. But on the other hand, you have Lattice's spectacular margin profile and undeniable momentum sitting right at the heart of a multi-year AI infrastructure boom.
As Lattice transforms from a pure-play, low-power chipmaker into a holistic system-level security and management provider, I want to leave you with this. Will this bold pivot and their everywhere companionship strategy solidify their AI dominance and justify that premium price tag? Or are the execution risks of bridging hardware and software simply too high? Weigh the data and decide for yourself. Thanks for joining me for this explainer.